All right, guys, I got to be honest with you here. I am seeing the same exact mistakes over and over and over again in regards to SoFi stock. I mean, we got exactly what we thought was going to play out, kind of before earnings, what happened to the stock after earnings, what's happened since then. And people continue to really struggle with not making this mistake. And it's hard. I agree with you guys completely, but many people are getting wrecked. They're confused on what to do and how to play this. And in the end, it can end up destroying your investment in SoFi. So let's discuss all of it today so that way you can completely avoid that mistake. Just make sure you like the video if you like getting the truth without the hype. Now, I addressed this exact series of mistakes in my group right after SoFi's earnings call because even though they're in the group and everything else, there was a lot of confusion. There was a lot of what to do next type deal. And thankfully, we were able to head off a lot of mistakes and obviously correct them and put people in the right spot and kind of let them know how to handle it more importantly. So that way you can put it in your toolbox as you kind of move forward with the stocks, because you can apply this to any stock, not just SoFi. We're going to talk about SoFi specifically today, but you can apply it to any stock that you want to own and that you currently own in the stock market here. And the huge sale from my group where you get free coaching and there was a one-on-one coaching, got that brand new stock course that just released. You get access to me anytime you want, guys. You don't have to wait on a video for me here on YouTube. You can just get direct access to me anytime in there that you want on our live Q&As or my DMs and be a part of the best 6, 7, and 8-figure Discord out there. We got a free stock analyzer tool for you to use as well. There is so much in the group, guys. Make sure you check out the pinned comment down there and see if a membership's right for you, because when this sale ends, that price is going up. If you need help with anything, the group can absolutely address it in a multitude of different ways. Whatever way fits you best, we have a way to help you out. So make sure you check out the pinned comment down there and take advantage of the sale before it expires and the price goes back up forever. All right, so let's jump into the video now. All right, guys, let's talk about something a little bit different today here. And it's just something that I see occasionally. It doesn't happen a lot, but I think we've all fallen into the trap of waiting to buy. And basically you end up feeling like you kind of miss a stock per se, or you miss stock altogether because it goes on a run or earnings happens and it runs up like we just saw with SoFi there. And you kind of feel like you missed it because you maybe got a little bit too cute with pricing there. And that's kind of the best way to describe it is sometimes we kind of are too smart for our own goods, our own good per se. And we end up missing a stock because we end up just kind of trying to wait. It's going to go lower. It's going to go lower. Or, maybe some of you guys may say, hey, Luke's price target is here. Therefore, I'm going to wait and be patient till it gets there. Then I'm really going to build out my position. And that's not really the best way to build out a position there. You're getting cute with pricing. And sometimes we're our own worst enemies with that. And so, especially for newer investors who aren't as experienced and don't have quite the command valuations and things of that nature right there, it can be really, really tough. So whenever I look at this scenario and I look at a scenario that happens with that, and let's take SoFi pre-earnings. It was going down, 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 down before earnings. And if you didn't have a full position built out, unless you really felt there was going to be a massive miss or something bad happen on the earnings itself, which again, going off your feelings is not the way to invest, right? But let's just say you had some very, like we had with Tesla, right? We knew based upon the prior earnings that, hey, this earnings was not going to be that great. Elon gave us the warning, the prior earnings. We had none of those indications with SoFi. And so if you were looking to build out a position there, it was better to just execute, your plan, buy when you felt that was at. If you really truly feel fair value was at $6 or so, okay, then obviously it may be a stock that you may not ever own, because if you feel the price is at $6, we may or may not see $6 again. And so it kind of comes down to conviction of stock. If you really, really, really want to own that stock because you feel like in the future it could be a, $15, $20, $30 stock, then at that stage you may want to just evaluate doing just a simple DCA to make sure that you get the number of shares that you want, to make sure you have a position built out. And then if you want to get kind of funny with pricing, which is what I do, whenever I get kind of to that bonus share, what I'm really trying to avoid is I'm really just trying to avoid overpaying for a stock, which with a stock like SoFi that was before this past earnings, pre-revenue or profit is a lot harder to do than a stock like Apple per se, where I can easily see and figure out where, generally, the general range of where fair value is and whether or not I'm overpaying or underpaying for that stock. It's a lot easier to tell with a stock like that. Even Tesla is easier to tell than a stock like SoFi is, where we don't really know what that baseline is going to be yet for valuation. But I see it a lot of times over and over and over again where people are trying to build out positions and you're trying to be good stewards of your capital, which I can agree with that. But sometimes, we get a little too cute with our pricing, a little bit too low. The reality is if SoFi is a $20 stock, do you really care whether or not you paid, $7 or $8 for it, or whether or not, you paid $6 for it or whatever the case is? Yes, of course, 6 is better. but there's no guarantees we're going to see 6 again. And we've been seeing 7s and 8s pretty consistently now for a while with that particular stock. So you had a time there to kind of build out that position and then get cute with their pricing. Now, I'm not telling you guys not to be patient and not to buy runs, just like we saw SoFi up 25%, after the earnings there. I'm not telling you don't be patient during times like that. What I'm discussing is those times prior to that where there was good pricing on SoFi, maybe not great, definitely not 4s or 5s. Hey, you may have missed that. That's okay. That's part of it. I don't know if we'll ever see that again, but it doesn't mean that you can't make the best buys and the best use of your opportunity buying during that time. Now, again, if it's not a high conviction play, a stock that you can kind of live without, hey, I'd be love to add it, but only at this particular price. Okay, that makes perfect sense there. But for a lot of folks I see, they have a high conviction in a particular stock and and of course it gets reinforced, right? Because you kind of wait and then it goes lower and then you wait and then it goes lower. And then before you know it, you almost kind of feel like you got a feel for it, whatever the case is. And then, okay, we had a day up, couple days up. Okay, but then it went lower. So I'm going to continue to wait. And you really, really want to buy out a position really bad in this particular stock. At some point in time, you got to take the leap and you just got to start buying. Don't buy all at once. I'm not into all-in buys or making my full buy, break it up into quarters, break it up into, heck, I'm just going to DCA over the next 3 months into this stock. Whatever you choose to do at that stage, that makes a lot more sense. But I know waiting to buy a lot of times ends up hurting a lot of folks and they end up significantly overpaying for a stock. Or what ends up happening is they end up never owning the stock because they keep waiting for this price that it's probably never going to come back to again, especially with a company that's performing. Now, obviously, when a company's struggling, okay, sometimes getting a little cute with price can pay off. But especially with a company that is just continuing to perform, knocking it out of the park, sometimes it doesn't pay to get cute with the pricing. It's like just build out your position and then be ready for whatever the heck happens. Because if you would have had your position built out before earnings, and I understand it has fallen since the earnings call there, and obviously, that makes sense too. You can have a 25% move day and then not think, or 20%, whatever the heck it ended up at, and then not expect people to take profits the next day. But the point being, you felt a lot better if you would have had your position built out ahead of earnings and getting that run up. And then obviously viewing it now as more of a, oh, hey, maybe we're getting another opportunity here. That's a much better spot to be in than having waited, trying to get a better pricing. You didn't get the bet out. Some of you may not have even gotten to start your position. Definitely may not have gotten to build out your position. And now you're waiting for it to come down so that way you can finally start out your position too. And it's just a tough spot to be in there. So don't get too cute with your pricing, waiting to buy. I'm not telling you don't stick to your price targets. I'm not telling you don't be disciplined. But a lot of times, a lot of folks are just wanting it to go lower because they want it to go lower and they don't really have a general price target, but not a specific price target, or your price target's based upon my price target, which with a stock like SoFi in this example is a huge mistake. I own a ton of it. We were buying it all last year. Well, not last year. Actually, yeah, a good chunk of last year, but definitely in 2022, huge buys at that stage. I don't need any more SoFi. I am good to go if I never buy another share. That's why I have my price target where it's at. And actually they're executing so well, I'm going to kind of look at everything again and probably move that price up a little bit because I just wouldn't mind adding due to how well they're doing execution wise. But you should not be basing that target of when you need to buy and when you want to build out based upon that, because my situation is probably completely different than yours. And the huge sale from my group where you get free coaching and the rest of one-on-one coaching, got that brand new stock course that just released. You get access to me anytime you want, guys. You don't have to wait on a video for me here on YouTube. You can just get direct access to me anytime in there that you want on our live Q&As or my DMs, and be a part of the best 6, 7, and 8-figure Discord out there. We got a free stock analyzer tool for you to use as well. There is so much in the group, guys. Make sure you check out the pinned comment down there and see if a membership's right for you, because when this sale ends, that price is going up. If you need help with anything, the group can absolutely address it in a multitude of different ways. Whatever way fits you best, we have a way to help you out. So make sure you check out the pinned comment down there and take advantage of the sale before it expires and the price goes back up forever. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.